Welcome to The Explainer. Today, we're digging into India's fertilizer sector. Now, this is an industry that's absolutely foundational, but right now, it's at a fascinating point for investors. We're going to break down the big picture, and then we're going to do a deep dive into one of the biggest players, Coromandel International, to see if there's a real opportunity brewing.
So, to really get a handle on the investment case, you have to connect two completely different worlds, right? You've got the soil out on the farm, and you've got the numbers on a stock market screen. And it all kicks off with a super simple idea. At its core, a fertilizer is just plant food. It's a substance that gives plants the key nutrients they need, nitrogen, phosphorus, potassium, to help them grow bigger and faster. A simple, vital concept. But how on earth does this basic science morph into a single company that's worth almost 60,000 crore rupees? That is a massive leap from a theory on a chalkboard to cold, hard market reality. Okay, let's get into it. All right, first things first. To really get why this matters for investors, we need to be crystal clear on what we're talking about, and more importantly, why it's so incredibly important. So fertilizers are basically food for our crops. And listen, for a country with over 1 billion people, getting high crop yields isn't just a nice economic goal. It's a matter of national security. It's that fundamental. This industry is, without a doubt, a foundational pillar of the entire country.
So, why is everyone suddenly talking about this essential, but let's be honest, often overlooked sector? What's going on that's putting it on every investor's radar right now?
Well, the biggest reason, the most powerful one, is this number right here. The government has just pumped a record 1.84 lakh crore subsidy into the sector. That kind of direct financial injection completely changes the game for these companies. And it's not just the money. You've got this perfect storm of three factors creating a huge tailwind. First, you've got stable government policy, which gives everyone predictability. Then you pile on those massive subsidies we just talked about, which goes straight to improving cash flow. And to top it all off, new gas regulations mean they have a steady supply of the raw materials they need. It's about as supportive an environment as you can ask for. Okay, so with that big picture in mind, let's zoom in and see how these massive trends actually play out for a real company. We're going to take a close look at Coromandel International. You see quotes like this from market analysts, and it really tells you everything you need to know. Coromandel is widely considered the absolute top-tier company in this space. They're the ones setting the benchmark for everyone else. And here's why. Coromandel's strength is its diversity. They're a leader in the high-margin phosphatic fertilizers, which are key for crop development. But they also connect directly with farmers through this massive retail network of over 750 stores. And they're not just sitting still. They're investing in the future with stuff like AI and drones for precision farming. Okay, let's talk numbers. Because a great story is one thing, but does it actually show up on the balance sheet? The financial story here is just as compelling. Let's start with that market cap again. At over 59,000 crores, you've got to understand this is no small-time player. We're talking about a real heavyweight in the Indian stock market. That number reflects its massive scale. Now, how's the market valuing it? Well, the price-to-earnings, or PE ratio, is kind of like the company's price tag. It tells us what investors are willing to pay for every rupee of profit. It's sitting around 21, and its earnings per share for the last year, a very healthy 96 rupees. So together, these give you a great snapshot of the company's profitability and its current valuation. And just take a look at their recent sales. For the quarter that ended in December 2025, the company pulled in revenues of over 8,400 crores. These are just huge figures that really show the massive operational scale we're dealing with here. So the financials tell a really strong story of leadership and size. But what about the stock itself? How has the market been treating Coromandel lately? And this is where the plot thickens. The chart here shows a really clear disconnect. While the business fundamentals and the whole sector outlook are looking strong, the stock price has actually fallen pretty significantly from its recent highs. And that gap, that divergence, is the central puzzle for any investor right now. So how do we pull all of this together? What's the bottom line for anyone looking at this sector and specifically this company right now? Well, it really all comes down to this balance. In the bull corner, you have these incredibly powerful tailwinds from the government and Coromandel's undeniable position as a market leader. But in the bear corner, you've got real geopolitical risks that could mess with their supply chain, and you just can't ignore the fact that the stock has been heading down recently. And that leaves us with the ultimate question, doesn't it? When you see a market leader, a gold standard company with solid fundamentals, and its stock price takes a hit, is that a signal to jump in and buy a great company at a discount? Or is it a warning sign that the risks are starting to bubble to the surface? That's the analysis you have to consider.